One hell of a gaping. It's been a while since we talked about good old gaping. Growth, gone. Small caps, gone. Crypto, you know that's gone. Gold, gape. Even the bonds, the TLT, something that I thought maybe have turned out well in this scenario, gape. So where do you put your money? Where do you put your money in this scenario? The housing market? Is that what you said? The housing market? Let's just have a look at the housing market. HGX is a tracker of the housing sector in America. And we can see here that we're well below our 200-day moving average. We are very much on big support. What happens when we fall through that? One hell of a gaping. What is the crack, everyone? Welcome back to Buy Wholesale. I hope, of course, you're all well. Listen, I wasn't about last week. Didn't get to do my week ahead video. God, what a video it would have been, because it looked messy last week and it was very, very messy how it all played out. So that would have been a great video, but unfortunately I was on a stag do. For those that have me on Instagram will know it was rather heavy, and with the bank holiday Monday, I didn't do my week ahead video on Sunday, so maybe fortunate, maybe unfortunate, I don't know. Listen, all jokes aside though, I hope you were trading safe. It was brutal. In the last couple of videos, I've been talking about getting the cash pile built up again. Something that we've done back in March when the big gaping came. We were loaded up on our cash and we read it up. So people might be asking, well, Damien, please tell me that that's going to be the same scenario again. Tell me this pain will end and we will see a bounce. I think it was about 6 whole weeks ago we did the video where we talked about how we're going to just really trade into sort of our consumer staples, because they are the last ones that usually fall off the cliff. We did it all in the video, compared it with the S&P, going. The S&P starts to fall. Consumer staples, they're the last ones. You maybe get about a week, maybe 2 weeks. We compared it all in 08. That's exactly how it's played out this time. They were the last again to fall. We had a great run of them for about the best part of a month. And then 2 weeks ago in my Discord, I said, guys, I'm out, starting to strip out profits, building up the cash pile. And I was all out of all of those swing trades that I had, gone, and I've been building up my cash pile. That is my current situation. That is what I believe most of our Discord members are doing. And throughout the week, we've just been shorting. We've been jumping on swing trades. We had a great day. I had my best day in a long time on Thursday and Friday, where we jumped on the Fed meeting. Thank you, Jerome. Just like last time, fact checked it. I said in the Discord, just like last time, if he gets this fired up, close your trade before close play on Thursday, because it will all go to gape on Friday. That is exactly what happened. We rode it up 60%, and then the next day we rode it back down, and we got about another 30%. So but pretty much double our money in those scenarios. Very, very nice. So all this pain in the game is nothing to be worried about if you have an understanding of what you're doing. However, what I will say is it's got very, very scary. The big gape, the mother of all gapes that we were talking about, it looks to be sort of really getting tested this time. No one can time the market, but all I will say is if we don't go through the floor this time, we will definitely be going through the floor. And again, we'll be saying recession in about 18 months for the last 6 months. So within the next year, don't pin me down to any specific dates, but that would be roughly my guess. Jerome pretty much came out, did everything as expected, and kind of dampened down the talks of a recession, which I think spurred the market on a bit. Bank of England the next day then went, recession's looming, we're going to increase our rates dramatically, it's all hell's gone loose, inflation's going to be 10%, and I think that has just sent ripples around the world, really, unfortunately. Ukraine's obviously picking up, we've got all those turmoil and stuff situation there, inflation. I remember the big canal that got backed up about 6-7 months ago. That is still having ripple effects. I can tell you within my own job right now, we're hearing a lot of supply chain issues with the construction industry, and a lot of them are still using that as an excuse. So it's pretty wild out there, and China's still partly in lockdown. So there's plenty of things that one would be nervous of, let's just say. But let's have a look at what Cramer's got to say about the week ahead. Kramer, week ahead. Own recession-proof names and have cash ready for when stocks come roaring back. There is no such thing as recession-proof names. So Kramer, you are wrong. There is stocks that will perform better in these scenarios. And the stocks that we have talked about many, many times, that I've just talked about earlier on, the consumer staples, those are the kind of things that can sort of hang on through inflation. Things that will stand the test of time. SPY, gape. Seriously, gape. So the week ahead then, we've got Monday, Tyson Fuse, Bio, Intact, Tyson Fuse, bet your bottom dollar, without even looking into the detail, they will do well. Peloton, be interesting just to see how they're doing, because this is an absolute disaster. Don't expect anything too good, but the last disaster was that bad that perhaps they'll be able to show improvement. That's what Kramer's thinking. Goodbye, Kramer. So let's have a look at some of the stuff that's performed well in the week. It doesn't look too bad. It's the same old stories. Our energy sector, throbbing. And the financial sector actually did reasonably well as well. Some good earnings coming out there, and obviously with interest going up, those are the sectors. Again, all stuff, if you're subscribed to the channel, you know all about this. It's the same old story. None of this is coming as a surprise. And let's have a look at the ETFs then perform well on the week, and no surprise. Energy sector leading the way, your oil, and some of the inverse plays as well. So we took a gamble on some earnings, and when I say gamble, I mean we bought literally before earnings on the dream that it would shoot up. A couple of days in advance, bought Facebook, ding! We bought also the Twitter thing because Elon Musk, ding! We also bought AMD, ding! So these are all trades, jumped in, good earnings, jumped up, closed out, done. All my Discord, a few members jumped in, did the same. Some decent trades as well on oil and gold. Playing it safe. And this is us talking about, you know, the 60% gains that we were getting on the NASDAQ stuff. Did some good trades on Tesla, brought my average price down. I sold a few at the top, did a bit of jiggery there. I was delighted with that. And this week, I'm just going to be doing the same thing. Jumping on every day, resetting, having a look, see what's good out there. So in terms of any particular stocks that I'd be looking at, well, ideally you want to be trading ones with momentum. Dollar Tree, currently not a position that I would want to be in, but I'm treading carefully. Sold it last week. We can see it's started to titter off, but we're still in a very good, strong position, well above our averages. So I like this. The markets are making me nervous that I don't really want to hold for a swing trade. I'd rather just jump in on the day and close out in the day. That's why the likes of your oil, your gas, your commodities, your shorting of the NASDAQ, long on the NASDAQ or S&P. Don't be playing about with built-in leverage. Go with leverage trades. And people say don't do leverage. There's nothing wrong with leverage if you buy the right ones. These ones expose you to 3 times leverage, but it's all wrapped up in a lovely bag for you. So stock wise, leave it be. These are the ones you want to be playing with. The SQQQ. Make sure you've got your stop losses.
Feeling down there now.
How is your ass?
My ass has got no latch.
Also, I want to say a big thank you to John and Pam, course members, getting me reading on the good old Elon Musk dream. I'll be on that. No doubt, really appreciate you for sending me that in the post yesterday. And I just want to welcome all the new people into the Discord. You know, it's been really going well recently, and I suppose that's for everyone taking advantage of the discount, because come June, the price will be going up. Also, we have the trading course as well. It's $89.99. It's going up in price come June. So if you want to learn how to trade and how to find stocks with momentum, it is all in the course, step by step. Tell you everything you need to know how to make yourself a better trader. That is enough of the promo. The only thing I'll ask you now is please subscribe. About 75% of the people that come back watching my videos aren't subscribed, and I'm so close to 4,000, so I really appreciate if everybody could smash this subscribe button, please. And with that being said, the last thing I'll say is watch this video. This is on Elon Musk's vision for the future. He talks about recycling batteries, lithium, all the good stuff that we cover on this channel, and I will catch you in the next video. Peace.